Good afternoon. The markets were largely mixed today until late this afternoon. We had been worried about impeachment talks all week, and then news of China trade. Trump has been Trump rumors about talk of delisting Chinese stocks from our exchanges here in the United States, and the banning of U.S. pensions from investing in Chinese stocks made the market drop about 1% today. It rallied at the close to close down about 0.5% today on the S&P 500. All the major indices were down. The stock market closed down about 1% on the week. So that brings the S&P 500 bill to up about 20% year to date on a total return basis. The bond market again continued its strength this week. However, we got back to inverted status when you look at the 2s and 10s. Two-year Treasury closed today to yield about 1.69%, and that's more than the yield of a 10-year Treasury at 1.68%. We've talked about this a number of times. That is an alarming inversion when you're getting more money to keep your money, more interest to keep your money's short. The last 5 or 6 times this has happened, we've had a recession in the United States within 18 months, on average about a year. So West Texas Intermediate closed down to 55.85 today, down about 1%, and that takes us all the way back to, Bill, we talked about this the last week. This takes us all the way back to the prices before. We think it was the Iranians that pickled off some cruise missiles into Saudi Arabia. So that's, potentially pointing to slower global growth while oil prices are down a little bit. Gold closed at 1503, down about 2/3%. Silver was down a little bit more. And so there's our market recap for today. I'm Jack.
And I'm Bill.
And this is the Jack and Bill Show. Last week we talked about the geopolitics of investing in oil. And I might add at eaglefms.net, we wrote a piece. Bill wrote the overwhelming majority of it, but you can get on our website and look at the, we put out a newsletter almost monthly, and I think this is a pretty good one that talks about what's going on with oil geopolitically speaking. But today we thought with, America is so divided politically right now. I mean, almost right down the middle. I mean, half of America is Republican and half Democrat, and tremendous amount of animosity. So, from my vantage point, it looks like the media has really been big on these Trump impeachment talks, which has come about because of some phone conversations that he's had with the leader of Ukraine. So what do you make of all this, William?
Well, it really does highlight a risk that we don't normally think of in this country, and that is political risk. And as Jack said, last week we discussed geopolitical risks, specifically those related to energy.
Let me interrupt you 1 second.
Go ahead.
We are live right now on Facebook Live, of course. So if you have any questions that you would like entertained while we're discussing this, fire away, and we will attempt to answer your questions. I'm sorry. Go ahead, Bill.
So Jack touched on some of the noteworthy news items this week, and those are political issues. Now, we can define political risk as the risk of a negative impact on business operations or investment returns due to government actions. And in the West, in developed nations like America, common political risks would include higher taxes, higher regulations. Normally, when you get into developing or third world countries, the political risks take a very different type. Things like expropriation, nationalization, interference, political violence, trade barriers, capital controls, and the list can go on. Well, as I said, those are risks that you would typically associate with a third world country, but they do seem eerily relevant for us in America today, given the actions that one political party is taking to overturn the last election, and the news today that Jack mentioned about the Trump administration considering limiting U.S. trade investment in China and forcing the delisting of Chinese stocks from U.S. stock exchanges. That's pretty radical. But let's just go back to the big news of this week, and that's the impeachment news. The Speaker of the House of Representatives, Nancy Pelosi, announced her intention to formally pursue an impeachment inquiry into President Trump. And we are not going to get into political punditry. We may do that on the side for fun, but we just want to focus and discuss the influence of political risk on financial markets, because this is a financial related broadcast. Now, Trump in response tweeted that the market, and he was referring to the stock market, would crash if he were impeached. Well, first of all, we would assign impeachment a very low probability. The Senate lacks the vote to enforce the president, so we don't even see that as very credible. And even if the president were impeached, it's really inconclusive based on history. The sample set is so small, we really cannot say definitively what the stock market would do in the wake of an impeachment. But we do know this, from the start of the impeachment proceeding against President Clinton and his acquittal 1 year later, the U.S. stock market gained 28%. So we would expect to see stock market volatility. Would there be a crash? Probably not. And one of the reasons why we can say that is that the markets do tend to look past political turmoil. So the effect, though negative perhaps, would be short term. We don't think that any impeachment action would have a long-term negative effect on the stock market.
Yeah, we were discussing that this morning, Bill, that never before in U.S. history have we had a president impeached and removed from office. Mm-hmm. So we think the markets would react very sharply if we had a president. It would take 2/3 of a vote from Congress to remove a president. And the kinds of news items that we've seen in the past with Bill Clinton and other presidents that have engaged in things like adultery, those seem very serious for a nation, but they're not very serious about the administration, of that office. Mm-hmm. And those are the grave kind of things that, when that's compromised, that could get a president, removed from office. So I'm sorry, keep going.
Speaking of politics, one might assume that the stock market would do better under a pro-business Republican president, and that's not necessarily true. In fact, historically, the stock market has done better under Democrat presidents. Now, just because we can say that there is a correlation there does not mean that there is causation. And there are some explanations that we can offer that would explain why the markets do better under Democrat presidents. And one is just simple timing. The stock market is a discounting mechanism. And so the stock market taking off during a Democrat presidential term could be discounting the future of free market reforms that would be implemented by the next president.
That's true.
But the other issue is who's in charge in Congress. Which party is writing the laws that directly impact businesses? That may have a bigger impact than who's in the White House. Well, the other thing that we want to take a look at is what are the proposals that are coming forth from the Democrat presidential candidates. because it does seem that the pool of candidates has taken a very hard left shift away from traditional moderate or centrist policies. One of the biggest proposals that we see coming forth right now is a government takeover of healthcare, as well as proposals such as guaranteed income, guaranteed child care, free college, forgiveness of student loans. All of these things sound wonderful until you have to pay for them. And these proposals, if they were ever enacted, would explode our federal government deficits and the debt burden.
Absolutely.
It would just shoot them into the stratosphere. And the only way that those things could be paid for, apart from a larger debt burden, would be more and higher taxes. And we are seeing that in these proposals from the Democrat candidates. For example, a wealth tax on net worth. Bernie Sanders even came out and said that billionaires should not exist. Financial transaction taxes. Okay, so this would be a tax on stock and bond trades. There would be increases to income taxes, payroll taxes, estate taxes, net investment income taxes, and the list goes on and on. The other thing that we are seeing put forward is government regulations. There is a very vast proposal for what's called the Green New Deal, with the goal being to decarbonize the U.S., and the estimated cost of that would run into the trillions. And then there's also a proposal to break up big banks and technology companies. So all of these are things that we would categorize as political risks. So if the market is upset and selling off over anything, it's probably going to be over the likelihood or not of some of these proposals.
Yeah, that's good, Bill. I mean, a lot of what you said seems to desire to crush the entrepreneurial spirit of the American way, from the beginning. And that's why, we're very much for free enterprise and capitalism, but there has been, a lot of pushback on this coming from, we think, largely from the extreme left and not centrist views here in America. But you brought up some really good points with that, Bill, and I wanted to reiterate one last time. We just put out a piece on the geopolitics of oil. Check out eaglefms.net. And if you have any further questions for us next week, just write in on Facebook and let us know, and we will address that in the future. Otherwise, we'll talk to you next Friday at the same time and location.
Have a good weekend.
Thank you.